Hey everyone, Paul here, and in this video I want to take a look at Boeing's valuation. So I want to take a look at a quote from the Wall Street Journal here to put this in perspective, go over some of their financials at a high level, talk about a tax benefit from some of the losses that they've had, as well as an analysis based on free cash flow, and then finally just to take a look at what some analysts are saying about this in terms of their price targets. So that being said, let's get into it. So there was an article in the Wall Street Journal recently that says that airlines don't expect international flying to recover toward pre-pandemic levels for 3 to 4 years, and they're using smaller planes such as the 787 and the Airbus in the meantime. Okay, so with this, what I wanted to talk about is that can sound bad, of course, right? If it's going to take 3 to 4 years, but on the other hand, I wanted to start the analysis to say, okay, let's assume it takes 3 years for Boeing to recover. What would they be worth today? Okay, so if we look at Boeing's financials from 2011 to 2020, we can see that they've really had some really strong years, and they were growing really quite well from 2011 to 2018. 2018 was the best year in the company's history, and then 2019 introduced some problems with the Max jet, and then that was just compounded with the issues with the coronavirus and the shutdowns and things of that nature. So their revenue has been the lowest it's been, in the last decade, and they've had losses that were just insane. I mean, they lost over operating income over 12 billion, close to 13 billion dollars. And we put that in perspective. We go back and look, geez, even just in 2011 and 2012, we combine the profitability from both of those years for their operating income. It wasn't enough to offset what they lost in 2020. Now, part of that loss in 2020 also, to some extent, I think that management was trying to include as much as what they could in the quarter or in 2020 because they can, to some extent, you want to get all the bad news out now so you can start turning that corner faster. That's one perspective. But there's actually also some tax benefits to taking these losses that they've taken. So let's take a look at that as well. So here's an article talking about the tax benefits that Boeing had from taking a loss of $5 billion dollars with their MAX charge, the issues with that plane. And just like they were able to use those tax benefits from that, they are going to, in a similar fashion, be able to use the tax benefits from the big loss they took in 2020. And essentially what that means is that future years' income, they're going to be able to use the prior losses to offset the future income, which means that their future tax bill isn't going to be as big as a result of their losses, which is ultimately going to be a positive for this point for shareholders. Now here, let's take a look at the free cash flow analysis for Boeing. And analyzing free cash flow is a really good way to analyze what the fundamental value of a company is. If you know the free cash flows in the future, it's really easy to discount those back and get a good understanding of the valuation. The hard part is knowing what those free cash flows are going to be. But we already saw with that the Wall Street Journal quote that we're expecting it's going to be like at least 3 years before they get back to normal. So let's take a look back, and we know that from the high level financial overview, 2018 was the best year in Boeing's company's history. But 2017 was a pretty good year, not quite as good as 2018. But I'm going to use that as a starting point. And I'm going to say that, let's say it takes them 3 years to get back to about the free cash flow that they had in 2017. And then let's say by that point, by 2005 and forward, that they're able to start to stabilize and grow. So they're going to start growing in 2025 by 3% their free cash flow per share. Okay. Now, if we start looking at that analysis, we can say, okay, well, what would the value be in the year 2024? And if this was to happen, their valuation would be about $341. Now, that's in 2024, but what you have to ask yourself is, well, what is that in today's terms? And what we do is we discount that back. And so by discounting that back, we're saying that $341 in 2024 would be the equivalent in today's dollars of about $263. And then, of course, their share price most recently closed at $194. So in this whole time frame, we can say, what kind of return would you expect from today to 2024? I'm saying based on this analysis that you could expect a return of up to 75%. But you could also look at it in terms of just the present value, right? That it's actually undervalued in today's dollars by about 26%. So that's my breakdown. Again, taking a free cash flow perspective, saying that yes, it might actually be 3 years before they kind of get back to normal. And even then, they're not going to start back on their best year. We're going to say that, hey, let's say that they kind of get back to the 2017 numbers by 2024. But now let's take a look at what the analysts are saying. So, really for all the analysts over here, so we have a high of 274 per share for a price target, a low of 230. Again, keep in mind that they're currently at $194 a share. But even this Morgan Stanley, so they actually went after the horrendous Q4 report from Boeing. They went from having a sell on the stock to actually boosting it all the way up to a buy with that price target of $230. So I think that's rather telling that, hey, even after that horrible quarter, that we're still seeing some analysts coming out and saying, hey, I think this stock is worth owning for the long run. So I think that there's some good value to be had with Boeing. And if we look at this, if we look at the 5-year history of the stock price, we see that, it really peaked up over about $440 in 2019. I honestly think that was actually, it kind of ran up a little higher than was really justified. Before the pandemic really, took the full effect, the stock was up over $330 a share. It went all the way down to $95 a share. And since that bottom, it's rallied up. It's about doubled since that fall. But if we really look at what the price target is, to say that this actually could be worth, let's say about 270 or something, by 2024, that would still put it, below where it was trading before the pandemic. So I'm not saying that this thing just rockets higher, it's a straight line up from here. But what I am saying is that, hey, even if they can kind of get some momentum going in 3 years from now, and again, some of those things play out, that you could be looking at some good value. Because when we look at a lot of these stocks, by the way, there's a lot of stocks that have actually not just, kind of bounced a little bit like Boeing has off of their 2020 low, but they've made new highs and they've redshirted much higher. You're seeing that even more so in technology stocks. So there's a lot of areas of the market that I think is overheated, and that's where you start to get into those conversations about, are we in a bubble? But I think that when it comes to a stock like Boeing, I think it is one of the rare places where there still is value in today's market. This is a stock that I currently own. I would look to add to it if it falls even more, because again, I think when you actually understand that when your price target, when you feel comfortable in your price target and nothing fundamentally changes with the company, then that just gives you a reason to want to own more of the stock. So thanks so much for watching. If you got any value out of this, it would help me out a lot if you could subscribe to this channel. I'm going to be putting more videos together like this. So hit that notification bell so you can get notified when those are posted. And I will see you next video.